Hello everyone, I'm Dr. Stock, and in this video we're taking a look at the Powell speech that comes out today at 10 a.m. and what it means for markets. So we'll do a little bit of technical analysis on the SPY and on the Qs, and we'll see what the market is setting up for in terms of moving up or down today to see green or red. It really is a traffic light kind of day. Take a moment to help yourself out by using my link down in the description by signing up for Moomoo and making a deposit of $100 or more. You could get up to 17 free stocks. By opening an account and depositing $100 or more, you get 7 free stocks, including a share of AI and BBAI. By depositing $1,000 or more, you get 17 free stocks, still including AI, BBAI. By depositing that money, you're paying yourself through those free stocks, and you're also supporting this channel, so thank you very much for that. Also, down in the description, find the link for Patreon, click on it, sign up, get access to my Patreon exclusive content, as well as access to the community in my private Discord. We'd absolutely love to have you over there. Take advantage of both of those opportunities, help support this channel. With that said, I'm Dr. Stock, Doctor of Education. Let's get right into it. All right, coming to us from Reuters. Fed Powell in Hill to appearance to update views on the status of disinflation. So we'll see if we actually get a really good look at that handsome gent right there. Let's move on. At his last press conference, Federal Reserve Jerome Powell said confidently a disinflationary process had begun, showing a gratifying corner had been turned. I remember this, and I thought that it came off rather dovish when he said these things, and also when he said that bringing down other lagging forms of inflation were in the pipeline. To me, that sounded like they were near the end of the rate hiking cycle, maybe seeing that one in March, maybe pausing after that. However, between the jobs reports that we've gotten and the fact that we still have the tight labor market and the hot January data that we've had, we don't know if he's going to change tune or not. So this is one of the final times that we'll give it an opportunity. There is also a little bit of testimony tomorrow from Jerome Powell, also at 10 a.m. So I think this is the big part of it right here, that when he does talk before the Senate Banking Committee today, that we're looking for how confident he is that the Fed is still on the right path. So we're looking to see if the attitude has changed to be a little bit more hawkish, that more is needed than what they originally thought, or if it's going to be the case where they think that they are already on the right path, that they already said that more rate hikes would be necessary, and if they're going to adhere to saying more rate hikes. So is Jerome Powell, is the Fed going to get more aggressive? Are they still as confident? We're going to have to listen to see what sort of tone that we get from Jerome Powell. It is possible that we don't hear a lot, that he still sticks to his guns and says that one report doesn't make a pattern. And well, he's right about that, and there's a lot of controversy over whether or not the January reports were a one-off due to seasonal adjustments, or if we're going to see a repeat of it with February's data that comes out, especially next week, March 14th and 15th. So we have CPI on the 14th, PPI on the 15th, and if you've been watching my channel, I've been talking about that for a while now. And I think that there's reasons to be optimistic about those reports as they come out. And then also we get the revisions that come on the heels of that. So the revisions for previous month's data, and we'll see if they would move in a positive direction for us, meaning that they would lower, or if they move in a negative direction for us, that they would move higher. And well, we'll see how the market reacts. With that said, we should transition over to the markets themselves, the SPY, the Qs, and we'll see how that's going for the S&P and for the NASDAQ. All right, so starting off with the SPY, zoomed way out to see the path that we've come from. And let's start zooming in, working our way to more present times. There we go. Look at that. Absolutely beautiful. So we closed yesterday at 404, so just 1% up from really strong support at 4,000. Now that was resistance that didn't really hold for very long, as we had 2 strong days in the market, and yesterday looked like it was going to be another strong day. I thought maybe we did get the 3 white soldiers that would send us, give us that bullish signal that would send us up back to these previous highs that we've seen. Instead, what we got out of it, in my opinion, is a gravestone doji that could possibly reverse the trend on us. And honestly, to me, it's a lot of market uncertainty. So the market didn't know if it should take off or if it should come back down because of the speech that happens today, because we don't know if we're going to get a dovish Jerome Powell or a hawkish Jerome Powell, one who's going to stay the course or one who's going to become more aggressive. I don't know that we get that in today's speech. It is something that we're going to have to watch and see as he comes out and talks. I think it's after the FOMC meeting at the end of this month, so March 22nd and 23rd, that we really find out any sort of change in course. The biggest reason for that is that we haven't gotten February's inflation reports on that. So I think that today could be a lot of reiteration of things that he's already said. So let's assume for a moment that, let's go with the market dropping as the case first, that he comes off a little bit more aggressive sounding, that it sounds that he gives some sort of indication that he's not as confident that what they said in February still holds true. We have about 1.5% to fall down in the S&P till we get to the 50-day. And if it comes off really negative for us, well, that's all the way down to 390, so 14. So that comes out to, that's 3.5% down. That would be a huge drop. Now, we didn't make it to that 200-day moving average the last time that the market opened real low for us, but this big green candle that we have, that ended up being a strong day, put us back over the 50-day, and then we were able to ignite the following day. So that was Friday of last week. So we could most definitely see some sort of drop if he comes out more hawkish or less confident. So it really depends on what sort of Jerome Powell we get today. If there's any sort of tone, anything that gets sniffed out by the markets, we're going to see it in today's price action following that 10 o'clock hour after he starts speaking. So between 10 and 11, we really could see a lot of volatility in the markets. As a matter of fact, I wouldn't be surprised to see the markets come out a little bit red to open up today. Now, let's talk about Jerome Powell coming off as dovish, or saying what they have been doing has been working, and that they don't expect inflation to continue to rise up as rapidly as what we saw with the inflation reports for January, and that the labor market being tight as it is something more structural, as he said before. As he gives us that flavor, let's say it does come off positive, we have up to 408. We have about 1% up until we top out to these previous highs that we've had before. And if he comes off as really dovish in this one, which again, I don't think that we have any big market moves until after CPI and PPI next week. Now, mind you, that's jobs report aside. That's assuming that we don't get anything surprising this week as JOLTS comes out and as initial jobless claims comes out. If we see exactly what we expect to see, that it comes in around consensus, then the market doesn't really react too much, in my opinion. If they come in hot like January did, then, we could see the market react in a negative way. If it comes off a lot lighter, cooler than January, the market could react in a positive way and it could rally. So I don't think that we revisit some of these highs, but they are possibilities, so I'll talk about them. So about $12 up in the SPY, so that's about 3% in the S&P that we could possibly put up. So we have about 1% to 3%. That would be the range that I would say for today in the markets. That's assuming like 1%, I think is very reasonable. I don't think we get 3%. He would have to say something very confirmatory in a very bullish direction for the markets in order to see that. I think 1% is reasonable. So downward, we got about 1.5% to give up. And if it goes really negative for us, and again, I don't think that it will, then we come down possibly to 390, so about 3.5%. So I think 1.5% down to 1% up, that's our range today in the markets. So I would be surprised to see it go outside of that based on Jerome Powell's testimony today. That's unless he does something other than neutral. If he comes off of that neutral stance, if the market doesn't buy what he's saying, that's something that could put us outside of those. I just don't expect it. All right, so now we're on to the Qs. And while I'm on the screen, I just want to draw your attention to the text that I have up here. And the reason that I want to draw your attention to it isn't so much that it says 310 to 312 until we hit resistance, and it's 2 to 3% up from yesterday's close. Over my Discord, somebody was asking about where to find resistance. Where could we possibly go following, leading up to the CPI reports? And I said, if we get all good news from Jerome Powell today, from the job reports, all leading up to that, and we don't have a lot of worry about how CPI comes off or how PPI comes off, that I think is where we really possibly top out leading up to those reports. Now, if those reports come in excellently for us, positive for the markets, it is possible that we break through there. So my reason for putting that up there was I put that on my cell phone through the Moomoo app, and it synchronizes. So you put drawings on the app on your phone, it synchronizes to the app on your computer. I just thought that that was a pretty cool feature, that it goes cross-platform in that way. So that way you don't have to do the work twice. Or if you do quick work on your phone, for example, that you could come to your computer and refine that work where you have that bigger screen to look at. Maybe that's just me because I'm 40 years old and, things aren't getting easier to look at on the screen in front of my face. I'm going to end up with bifocals sooner than later. So let me zoom in on this for more recent price action. So this line, really think instead of, it's right now at about 311, but I said 310 to 312. And like I said, I drew that on my cell phone, no refinement. I do think more about areas of support and resistance more so than lines. But lines are easier to talk about with the understanding as you talk about them that there's usually some sort of give or take a little bit on either side of that. You can see this chart looks very much like, ooh, sorry for the jumping around. This chart looks very much like the SPY did. We still have the same doji formation right here. Again, I thought that possibly that we keep running up. However, the bears had a different idea of that. We had some selling into it, and right now we're sort of waiting, sitting in limbo for what direction to take based on the Powell testimony that we get today. And then I think jobs is the bigger catalyst out of the two of them. So we could come back to this 200-day, which ended up being very strong support, as I said in my previous videos, and that for the NASDAQ would be just a huge drop. I think that we actually have a minor area of support here, about 1.3 to 1.4% down. I think that's the first place that we would go. I think this, sort of like what I said with the SPY, I think we'd have to get much more negative news to come down, like to see a much more hawkish Jerome Powell, to see us drop down, possibly even tag a little bit below that down to the 50s, sort of like we tagged just a little bit below the 200-day here. So that's down $13. So we'll just say 4%. And that would make sense if we're seeing a little bit more volatility coming out of the NASDAQ rather than the S&P. The 200-day, I think, is where we really see that happening. So 4% down in a single day based off what he says today, I think that's unreasonable. I don't see that happening. I think it is much more reasonable that if we don't like the things that he says, that we do give up that 1 1/3% in today's market. Now, if we do like the things that he says, let's zoom out a little bit more. So if we do like the things that he says, we don't have at least a lot. Let me zoom out a little bit more after that. Yeah, we don't really have a lot stopping us on the way up. We have some minor areas of resistance, maybe 1, maybe 2% up from where it's at. I don't think that we make it up to this line. This line, I think, is going to be serious resistance for us. And that really addresses the question that I was being asked in the Discord. Where's that big area of resistance? And I think that's where that run for January, February finally stopped and kind of kept sputtering out, that 310 to 312 range. So I think it'd be very difficult to break that, especially before CPI and PPI. So I think we got about 1% to go to the upside, give or take a little bit from that. And I think we have about 1 to 1 1/3% to give up to the downside. So those are the movements that I see for that. And that would be assuming that Jerome Powell comes off as neutral, as I think he will. So we're going to have to listen to a speech, hear what he has to say, and you'll know if the market believes what he says is hawkish, because you'll see the market go red. You'll know if what he says comes off dovish, because you'll see the market go green. What I don't think that we get is really uncertainty from the markets over what Jerome Powell has absolutely said. So trading sideways, I think, today, where we barely move off at the 0% mark from the previous close, I don't think we see that. I think that we see probably about 1% move from the S&P, probably about 1% move from the NASDAQ, and maybe that doesn't say a lot in the volatile environment that we find ourselves in over these past several years. However, it's what I see going for it, and it's anybody's call as to the direction. Like I said, I think he's going to try and come off neutral. He could possibly come off on the dovish side. I am inclined to think that he's going to come off, if anything, slightly on the hawkish side of things. So especially given that it's part of the dual mandate to ensure price stability. So coming off as dovish, given the hot reports that we've seen since the most recent FOMC meeting, January 31st and February 1st, and then getting unexpected reports following that, I don't think he can afford to come off on the dovish side. So if I had to put a vote to it, and you guys can go ahead and let me know down in the comments what you think about this, I think that he would come off neutral to a bit hawkish in today's testimony, with maybe just a little bit of seriousness or gravity to the way that he speaks. I don't know that he would come off as lighthearted and dovish. I don't think we hear the same tone that we heard from him on February the 1st. Neutral to down, those are my two calls. I don't know that I necessarily see a lot of upside coming from his speech today. That's what I have. If you guys want to hear more of my commentary, check out the link for the Patreon down in the description. Click on that link, sign up, and get access to Patreon exclusive content and be a member of the community that I have and participate in the private Discord. Also, check out that link for Moo, sign up, get your free stocks. You're supporting yourself while helping to support this channel where I can keep on bringing information to you, to YouTube, and increase my services all the time. So thank you very much. Really appreciate it. Hit the like button if you like this video. Hit the subscribe button to see more of my videos and ring that notification bell to be notified anytime that those videos come out. I'm Dr. Stock, Doctor of Education. We'll see you in the next video.